Hello students, in this video I am going to teach you adjustments in financial statements. First of all, what are adjustments? Adjustments are some unrecorded transactions or some mistakes made by the accountant at the time of preparing journal or ledger. But if we want to find out the exact profit, we have to record the transactions which we have forgotten already, and we have to make the rectification of errors already done by the accountant. So we have to make some adjustment in our financial statement to find out the accurate profit. So there are more than 20 adjustments in our syllabus. Let us start with very first one, that is closing stock. Closing stock means stock unsold lying with the owner at the end of the year. First of all, it will be recorded in the credit side of trading account. Right here in the credit side of trading account. And second time it will be recorded in the asset side of balance sheet. Second adjustment, outstanding expenses. You know what is outstanding expense? Outstanding expense means expense which has become due but still not paid. Still not paid. Services has been taken but the amount is still to be paid. So according to accrual system, we have to add this outstanding expenses in related expense in the debit side of trading and P&L account. And second time it will be shown in the liability side of balance sheet. Let us take an example. Suppose wages paid is given 20,000 in trial balance, and in adjustment 4,000 outstanding wages is given. So first of all we will add outstanding wages in wages account. Total wages will be now 24,000 and outstanding wages will be recorded second time in the liability side of balance sheet, because we have to pay this amount to the workers. That's why it is a liability for the business. Third adjustment is prepaid expenses. Prepaid, that means expenses paid in advance. These expenses are related to next year, but we have paid in current year. So these are related to next year. What we have to do? Minus from the related expense in debit side of trading or profit and loss account. And second time, on the other hand, we have to record prepaid expenses in the asset side of balance sheet. Now the fourth adjustment is depreciation. On fixed assets. Depreciation means fall in the value of fixed assets, decrease in the value of fixed assets due to any reason. So depreciation is an expense for the business. So it will be recorded in the debit side of profit and loss account. On the other hand, it will be deducted from related asset in balance sheet. Let us understand this concept. Suppose in trial balance machinery is given 1 lakh, and in adjustment 10% depreciation is to be charged on machinery. Less depreciation, 10% of 1 lakh is 10,000, and second time this depreciation will be recorded here to depreciation on machinery, recorded in profit and loss account. So this is the adjustment for depreciation on fixed assets. Next, accrued income. Accrued income means income which is earned during the year, but amount is still to be received. Amount is still to be received. Amount is not received till the end of the year. So because it is related to current year, that's why where we have to record number 1, plus in related income. Plus in related income in credit side of P&L account. On the other hand, it is an asset for the business because we have to receive cash. So second time it will be recorded in asset side of balance sheet. Asset side of balance sheet. Let us take an example. Suppose commission received is given in trial balance rupees 10,000, and in adjustment it is given that commission is still receivable 500. So if commission is still receivable, that is also income of current year. That's why this will be added back to commission received. Accrued commission. On the other hand, second time it will be recorded here in the asset side of balance sheet. Accrued commission 500. Next adjustment, commission received in advance. Commission or any other income. Income received in advance. You can say it unearned income. Income received in advance means income related to next year we have received in current year. So this is income related to next year, not of current year. So we have to deduct it from related income in credit side of profit and loss. On the other hand, second time it will be recorded in the liability side of balance sheet. Let us take an example. Suppose in trial balance rent received is given 65,000. Rent received is given in the question 65,000, and in adjustment it is given that out of 65,000, 15,000 is related to next year. 15,000 is related to next year. That means 15,000 is not an income of current year. So this will be deducted from the rent received during the year. So net income is 50,000 of current year, and 15,000 advance income, it will be recorded here in liability side. Advance rent received or unearned rent, you can write here unearned rent 15,000. Next adjustment, interest on capital. Interest on capital. You know, capital is an internal liability for the business. Owner has provided us fund, that is known as capital. So it is a liability for the business, and business has to provide some interest on capital to the owner. So this interest is an expense for the business. That's why it will be recorded in the debit side of profit and loss account. Number one, it will be recorded in the debit side of profit and loss account. On the other hand, we have to provide this amount to the owner, and capital is we have to pay to the owner also. So this amount will be added to plus in capital in liability side of balance sheet. Let us take an example. Suppose capital is given in the trial balance 1 lakh, and in adjustment we have to provide 5% interest on capital. So 5% of 1 lakh, 5,000. This 5,000 is expense for the business. So first time it will be recorded here in the debit side of P&L, and second time it will be added in capital. Thank you.